NACA is an excellent program for a lot of first-time home buyers, but there's some things you need to know about how to navigate through the process. And I'm going to show you a couple things, so let's get into it right now. Hey everybody, Dietrich Williams, Realtor with Compass, Baldwin Hills, California. Welcome back to another edition of Info on the Go, the show where I give you tips, tricks, and insight on how to buy, sell, or invest in real estate the easy way. If that sounds like something that you're interested in, please make sure you do me a favor. Smash that subscribe button and ring that bell so that you're notified every time I upload new content to YouTube. The Neighborhood Assistance Corporation of America, otherwise known as NACA, is a nonprofit organization which essentially mobilizes against the banks to have them atone for their predatory lending practices and make home ownership affordable to many more people. Now, it's a great program that is based on character-based lending criteria, which can make it affordable for you to purchase a home with little to no money down. Some of the benefits to using NACA is that there are no closing costs. The lender pays all closing costs. There are no points, no fees. There is no down payment. There's no PMI, which is huge. So private mortgage insurance can add on to what you're paying in your mortgage. And usually when you don't put down 20% or more, the lender will tack on PMI or mortgage insurance. With NACA, you don't have any. There are also no minimum or maximum income requirements, and interest rates are usually lower than what you'd find on the market, with the ability to buy down your rate. And I believe that for every 1% of the purchase price, you can buy down your rate 1/6%. So what does that mean? On a $500,000 loan, it would cost you $30,000 to buy down that rate 1%. That's saving you like $90,000 over the entire life of the loan. Now, how was NACA able to do this? Well, it kind of put the squeeze on some of those predatory lenders, partnered with them, and got $20 billion worth of funding to help people get into homes that they normally might not have been able to afford without any assistance. So how does all of this work? Well, there's a process. The first thing that you have to do is attend a NACA workshop. I believe these are done virtually now due to COVID, and they're done on Saturdays from 9 a.m. to 1 p.m. local time. Yes, it's a 4-hour workshop, but where else are you gonna go for 4 hours and save $90,000? You do the math. It's probably worth it. Now, afterward, they're gonna give you a code. You're gonna have to use that code within 1 hour, because if you don't, you're gonna have to attend that workshop all over again. So use the code. Now, the next thing that you're gonna do is upload your documents to the NACA web file. They're gonna assign you like a NACA ID. They'll show you how to get into the web file and create your profile and everything. You're gonna have to upload a ton of documents in there. Your W-2s, tax returns, bank statements, just things of that nature. So here's my word of advice to you, and this is what I tell my NACA clients all the time. Make sure you have physical copies of those documents, save them to a thumb drive, and then finally save them to the cloud. Why am I telling you this? Because every NACA MC or mortgage counselor isn't always readily available. They're assisting a ton of people out there who want to use this tremendous program. And sometimes there are certain days that they don't work, or they may be part-time. So here's what I mean. In this market, speed is very crucial in terms of getting deals accepted and getting things done. So if your mortgage coordinator or your MC calls you or emails you on a Friday morning and says, we need this document, and you don't get back to them until, let's say, Friday afternoon or Friday evening, well, if they don't work Monday, they're not gonna see your documents until Tuesday at some point. If you're lucky, Tuesday morning. Well, by that time, you may have missed out on a deal. So if you have all these documents saved up in these 3 different places that I'm telling you about, especially within the cloud, you can get that information to them right away so that you are not delaying the process by not sending them the information that they need on time. The third step, your MC is gonna make sure you meet the qualification requirements. Now, they're gonna work with you in terms of getting your budget together and staying organized, but they're also gonna help you determine what is an affordable mortgage for you. How do they determine that? Well, they're gonna take, if you're a renter, they're gonna take your rent as the baseline. And then they're gonna look at what you can save over 3 to 6 months. That's savings that's coming directly from your paycheck, not money that you're borrowing, that you're putting from, pulling from a credit card, or that you're opening up any new lines of credit or loans, and not money that you're pulling from like your savings account and saying, hey, look what I saved, and moving money from here to there. No, they want to see that you're actually saving money. So they're going to take whatever that amount is that you have been saving over that 3 to 6 month period, add it to whatever you pay in rent, and that essentially becomes what you're qualified for. NACA is also going to look at your housing ratio. This is the amount of your mortgage divided by your gross income. If your numbers are nowhere near where those criteria need to be at, there's going to be some work that you need to do. They're also going to look at your DTI, or your debt to income ratio. That's the amount of debt you had divided by your gross income. That percentage should be around 40% or lower. That's because when NACA puts you in a home, they want to make sure that not only are you able to meet the mortgage requirements, but that you're able to do other stuff like eat, right? So they don't want you to wind up being house poor. Now here's where you're going to have to be a little bit aggressive in increasing your business acumen, because not every MC is as organized as you would want them to be. You're going to have to stay on top of all this stuff. I've been fortunate to work with a rock star MC over at NACA. Shout out to Katia. She is solid, but not every MC is like Katia. And I hate to say this, if your MC is trash, then this program is going to suck for you. So you're going to have to be persistent, organized, and stay on top of your MC during the entire process. Now at this point, you're going to be NACA qualified, and then it's on to the next step. Step 4, you're going to go to a NACA purchase workshop. Now this is where NACA is going to show you how to search for homes and whether the homes that you're looking at fit the criteria. So they'll give you some information. They'll send you to some other sites. I believe one of the sites is like the Fannie Mae site. I can't remember what it is, but they'll send you to sites, and you're going to be able to look up those particular houses that you like and make sure that they match the criteria that NACA has. NACA is then going to qualify you as a priority member or a non-priority member. A priority member can either be low to moderate income, which means you earn less than 100% of the average median income of a metropolitan statistical area, or MSA. An MSA is basically a city with surrounding communities that share like social and economic factors. Just know that when you see the terms AMI, or average median income, and MSA for metropolitan statistical area, say that fast like 6 times, tongue twister, that's what that means. So you can be low to moderate, or you can be high income, which means you earn over 100% of the AMI in the MSA, and that the house falls in a census tract, which is below 80% of the AMI. Again, a lot of big acronyms and things that I'm throwing out there, but just trust me, they'll show you where you can look this information up, and once you plug in the address, it'll tell you what the MSA and the AMI are. And then you can determine whether it fits the criteria. If it doesn't, you can't look at that house. If it does, kudos. Now at this point, NACA is either going to assign you what's called an IHA, or an in-house agent. That's one of NACA's own agents who knows the process. So they're either assign one of those to you, or if you want to use your own real estate agent, you can. Just know that they have to be NACA certified. This is also the stage where they're going to give you the qualification letter and your affordability form. Your qualification letter is going to be the thing that you essentially attach to your offers that says that you have been qualified for a NACA loan. The affordability form lets you know, hey, here's what you can afford based on all these criteria. Make sure you stay within those parameters. Now you're ready to go out and find the home. And once you find a home that you like, you're gonna have to get what's called a PSL, or a property specific letter. That's the letter that is specifically for that one property. So you have to do this for every property that you are interested in putting an offer in before it actually gets accepted. Your MC will walk you through that, but in order to get that PSL, your agent or you is going to have to submit the MLS printout, as well as what we call a property profile, which shows like the tax records. Now let's say you get your offer accepted. This is where you move to step 5, where you complete credit access and you're going to submit the bank application. Now remember earlier when I said you were uploading all these documents to your web file? You're going to have to upload updated documents to the web file in order to complete this process. Again, this is why I say make sure you save that information in the cloud on a thumb drive, or just keep it with you physically. At least that way, if one goes down, you have a backup or two. At this point, NACA is going to do its own underwriting. So they'll collect all your documents, they will do their own underwriting, but then they're going to send that information to the bank or the lender, in this case, B of A. The bank or B of A is going to do its own underwriting as well. And this is why the process tends to take a little bit longer, because you have two sets of underwriting that are going on. But if you are on top of it and organized from the beginning, it makes the NACA process in order to underwrite you much more smoother, so that when they pass it on, there's not a lot of hiccups and the bank's not trying to look through other stuff to make sure that you can afford it. You have given them all your information. So make sure, I can't stress this enough, make sure you stay organized and on top of your MC and get them all the documents that they need so that it doesn't delay your closing anymore. The next step is pretty much the last one: lender approval and close on the home. Now your lender is going to update you on the status of your loan process, and they're going to also tell you of any missing items that are in your web file. So you're going to need to respond to them as soon as possible if anything is missing. If you've been following my advice, and you should, you have been organized, so there should be nothing missing. But if there is, you have your backups in the cloud, on you personally, or on a thumb drive. Respond as soon as possible, because if you don't, it could actually derail your deal. If there are any outstanding issues, you just want to make sure that you're working closely with your MC. Now, during this time, there are probably things that are going on with the house, because you're going to have to get a NACA certified home inspector and a NACA certified termite inspection. Both of those are going to be crucial. They have to come through NACA, and they'll give you a list of vendors, depending on where you are, a list of vendors that you can use. Now, within this process, the home inspection might come up with some things that they deem need to be fixed before you can move into the house. It's kind of like an FHA or VA loan that way. So there's certain requirements that need to be met. So the seller either needs to fix these items, or they can possibly give you credit to have these items fixed. You have to go through the hand department. That's a whole nother thing. I'm not going to get into it right now, because these are things that you'll find out as you go through the process. But it can work either way. They can either credit you that money to get the repairs done, or they can do the repairs themselves. Now, your real estate agent is going to have to negotiate these things for you. And that's why it's important that you have a solid real estate agent who knows how to do this process. And that's why NACA says they need to be NACA certified in order for you to use them if you don't use an in-house agent. Again, they're doing this not only to make sure that home ownership is affordable, that you're not moving into a money pit that's going to require a ton of repairs once you move in and deplete your savings, and then again make you house poor. And so they don't want the blessing to turn into a curse or a nightmare. Now, once this is all said and done, a closing coordinator will contact you and let you know where the closing is supposed to take place. Historically, they've been at the NACA offices around the country, but due to COVID, these are probably happening virtually, or they're only sending somebody to you to sign all of the documents that you need to sign. They may, however, ask you to take pictures or video to just kind of document the process. But at this point, congratulations, you are a homeowner. Now, this is just really a basics video, right? It's a 4-hour seminar. I can't record a 4-hour video and walk you through the entire process. That would be cruel. But you get the gist of it, of what it takes. Now, I will say this, it's a great program. If you are thinking about using this as an investor, I'm gonna just stop you right now. Don't. This is a program that is not for investors. This is a program for home ownership, not investing. NACA is big on home ownership, not really wealth creation. That being said, you are able to purchase multifamily properties using the NACA program. What do I mean by multifamily? I'm talking about a duplex, triplex, or a fourplex, or what we call a quadruplex. You can do that. Now, there are stipulations, is that once you close on that home, one of those units has to be vacant, because you will have to occupy it. They want owner occupancy for this program, right? So you can go get an income producing property, but they want you to live in a unit. There's another stipulation, is that because NACA wants you to stay in the home for the life of the loan, they are going to put a lien on that property. So I believe the lien is like 25 grand. So if you decide that you're going to sell before 5 years, or refinance before 5 years, you will have to pay that 25 grand back. So yes, there's somewhat of a truth that this is free money, but not really free, because if you move out early, you're gonna have to pay it back. And most of the people that I know don't wind up necessarily leaving that house because the interest rates are so low. To refi out means their mortgage payments are probably gonna shoot up. Now, if you're using this as a long-term house hack strategy where you know I'm gonna stay here for 5 years and then I'm gonna refi out and do some other things and use this as an investment property, that could work, but most investors aren't looking at 5-year horizons. They're typically looking at 1-year horizons, which is why most times if you're house hacking, you're using FHA or conventional loans. Now, if all of this sounds too good to be true, you're both right and you're wrong. It's a great program, but there are some stigmas attached to it. One of them being that the process takes too long. This isn't right or wrong, true or false. It really depends on you. So if you're diligent, if you're persistent and you're patient, then this process can go really smoothly. If you are disorganized and your stuff is just all over the place, this process can take you up to a year to complete. So my last NACA deal, my clients were really on top of it. We closed in 32 days. We asked for a 45-day escrow, which is typical on a NACA deal, but we closed in 32. Even with the amount of repairs that we were requesting or the credits that we were requesting, we were able to negotiate that fast enough to close in 32 days. Another myth is that this is a program for low-income people or people who have extremely poor credit. This isn't true. This is absolutely false. So those clients that I just told you about that closed in 32 days, they were 6-figure income earners with great credit history and credit scores. But they recognized an opportunity to get into the market at interest rates below 2%. So they were savvy in using the NACA program to get into a home where they can pay a lower mortgage. They knew that they were going to be in that home for at least 5 years. And if they decided to sell at that time, they probably are going to reap a huge equity benefit based on what they're paying and the way that the market is moving. So no, this isn't a program that is just for low income people. Now, there may be more lower income people who are in the program, but it wasn't specifically designed for that. Another myth is that listing agents and sellers will not accept NACA deals. Now, I just told you about a client who closed on a NACA loan and a NACA deal, so obviously that is not the case. But I had to sell the listing agent on why this program was beneficial to the seller. And then I had my MC call the listing agent and verify and add on to that, and we were able to get the deal done. Now, my client did come in above ask, and with NACA, you're gonna have to make sure that if you do come in above ask, the appraisal matches the value. Fortunately, our appraisal matched the value. Now, NACA may allow you to waive your appraisal contingency, but that really depends on how well financially you are doing and what you have saved up. But it's on a case-by-case basis. It doesn't happen for everybody to do this. My client didn't have to do this because the appraisal came back at value. So we came in above market list and it appraised for that, but we sold the listing agent on why this was a benefit. Earlier, I told you that the lender pays all of the closing costs. That's not just for the buyer, that's also for the seller. So in a place like where I'm at, Southern California, the closing costs can range from anywhere between 2% and 3% of the list price or of the price that you are offering, the offer price. So for a $600,000 home, that could be $12,000 to $18,000 worth of finances that the seller keeps in their pocket. That's a huge benefit. The lender will also pay for the city and county transfer taxes. So for LA County, LA City, if I just add them all together, that transfer tax is $1.10 for every $1,000 of the purchase price. Some cities will actually add on to that. So for instance, LA has a document transfer tax, which is $4.50 for every $1,000 of the purchase price. So for that same $600,000 home, you're talking about $660 worth of city and county transfer taxes and another $2,700 for the document transfer tax. That's $3,300. Plus, if it's 3% closing costs, That's like over $20,000 worth of fees that the seller doesn't have to pay using a NACA buyer. Now you have to determine whether NACA is a good fit for you, but if you're somebody who has minimal capital and looking at a way to break into the housing market, this could be a solid way for you to do so. If you're looking for videos on other loan programs or different types of down payment assistance, you might want to check out this video I did right here.